Welcome back to the channel. Welcome back. Today I'm going to be sharing with you my strategy and how I apply my supply and demand strategy on the M5. So basically I've been trading for about 9 months, and I've become a profitable trader in the last 3 months, and that's basically when I discovered supply and demand. Now, there's a lot of strategies out there, and I've tried a lot of different things using EMAs, RSIs, and MACDs, and looking for divergences and all sorts. And it's only when I switched to using supply and demand, I finally understood what was going on with the markets. These charts started to make a lot more sense to me. The behavior of it and so on. I understood why I was bouncing from this point to that point and so on, because I understood supply and demand. And there's a lot of different ways of applying it, and I've refined and fine-tuned my preferred way of applying it, and that's what I'm going to be showing you today, as we're going to do some back testing together. So this is H1. I normally day trade, so I'm looking for some scalps, and I'm looking for 3 to 5 scalps a day, and trying to get in and out of the market within 5-10 minutes of a move, because that suits me in terms of personality. I don't want to sit in a move. I don't want to spend my whole day looking for a move. I don't want to spend my whole day waiting for a move and so on. I just want to get in and out, get my money, close the laptop, close my phone, and be done for trading for that day. So I'm going to show you exactly what I do in terms of back testing with supply and demand, and we're going to be on the M5. So this is live charts. I haven't prepared nothing right now. I'm just going to scroll through and backtest with you, so you can see exactly how I look at how I read the charts. So market is open. Let's get to the top here. Okay, so we've got some price action here. Nothing's going on here. So let's scroll backwards and I'll show you some examples of supply and demand. So there's one here. So what we're looking for here is aggressive buying or aggressive selling, right? And the theory is, when there's aggressive buying and aggressive selling, there's an imbalance, which is this, right? It creates an imbalance. And that imbalance basically means there's some orders that have not been fulfilled. So when price comes back to that area, the orders need to get placed and filled, right? So this is what we're looking for. We're looking for consolidation and a breakout from consolidation, price to come back, and we're looking for a reaction. So looking at this here, we've got the consolidation, which we don't really want to trade, we're not interested in, and we're waiting for a breakout. So we've got the breakout here. So what I'll do, I then mark out my zone here. So this point here, where price got pushed down, and the low of it here, where it stopped before it broke out, right? So this is my zone that I want to trade, right? Let's just zoom in a little bit. So what I would then do is wait for price to come back to the entry of this zone, and then I'll take a buy. So I'll mark that out. So we're looking at the price roughly around here, yeah? So now what I tend to do is just scalp quick moves, 5-10 pips. I'm happy with that, and that's enough for me. Using the right amount of lot size, that's enough for me per day. If I do 2 or 3 of those, it's decent money. So imagine, for instance, we're using one standard lot here. Price comes back here, we enter here at the top here, or should I say at the bottom, and we get, what was that, 5 pips? So it's about 18 pip move there, just from that reaction. So definitely I get my 5 pips and I get a little bit more just from that little move there, yeah? So moving on, let's find another zone. Get rid of this. Might keep that line there. So zoom out here, let's see if we could find it again. So what we're looking for again, if you remember, let's see, I think I just saw something quite interesting there. Zoom out a little bit. what we're looking for is aggressive buying and aggressive selling, yeah? So, but we're looking for consolidation, then a break from consolidation. We have some consolidation here. We do have a break here. So I'm going to show you how I would read an entry for this one. It's different from this one here. This here we have a base, then break from base. This one we have an ascending price action, then a drop, right? So there is a base here, but my entry would not be there. My entry would be, so I'll draw out the box. I'll show you exactly how I found my entry. So from the tops here, that would be my entry. And just that candle there, yeah. So that's my zone here, yeah, from this price action. And we're looking at this imbalance really. So as you can see here, consolidating up, then it dropped, right? When price entered that zone for the first time, we got an instant reaction. Again, that's what we're looking for. That's what I would scalp. Probably did take that trade as well. Where is that disappeared to? There it is. So let's see if we will zoom in again and not lose it this time. So here we are. So we've got that imbalance that needs to be filled. So we know price is going to return to there. And as it does, so we're down here, as it shoots up, it gets an instant reaction. And again, that reaction there is a quick 29 pip move. Yeah. So, and it took what, one candlestick, 5-minute candlestick. So 29 pips in 5 minutes. Again, if we're using one standard lot, that's $290. And for me, that's enough in a day. I could scale up and double that amount and so on. So you can see again, price then returns to the that zone, goes past that last bit, grabs some more orders, comes down, goes past it again, grabs some more orders, then starts selling off a little bit here before it pops it. Yeah. So one other thing to take into consideration or take into account, I'm only interested in the zone for the first time. So I'm only interested in this first move to grab all the remaining orders there and go down, right? The second, third touch here, fourth touch here, I'm not interested. And this is why, because after the first touch, it could easily just break past the zone and, you know, it's no longer a valid zone for me. So I wouldn't trade it after the first touch. So that's another example. I'm going to go to another pair here. One thing about supply and demand, it's universal. You can apply it to any pairs, you can apply it to any instruments, you could apply it to crypto, stocks, anything you like. One rule of thumb you need to take into consideration is to try and apply it to something that has high volume. So you avoid manipulation. So there are some penny stocks and stuff like that you just want to avoid because it's so easy to manipulate price with things like that. But instruments like, you know, big boys like this, Euro, USD and GU, it's less likely that you're going to get manipulations as often as you would say in a penny stock or something like that. Yeah. So again, quickly show you again here. Get rid of that. So as you can see, this is unrehearsed. This isn't the best like examples that I've picked up previously. I'm literally showing you as I scroll through how I read these charts and examples of supply and demand on these charts. Because a lot of times when you watch YouTube videos, you see people showing you best examples of their strategy working, and they don't really show you the examples of it not working. So you fall into the pretense that their strategy is successful when a lot of them, the win rate is less than 50%. Some of them are 30%, so on, and that works for them. But I'm not someone that could take 7 losses to have 3 wins. I'm not someone that could take that without getting emotional, especially because of my inexperience. I'm not able to control my emotions to a point where I could take more losses than wins and not revenge trade. So with supply and demand, it's perfect for me because, you know, my win rate typically is above 80%. If I follow the strategy, it's above 80%. But anyway, I digress. I'll quickly show you here. So this is a beautiful one here. If you can see here, we've got consolidation here, and we've got really aggressive buying up to the upside here. So we mark out this zone here. So like I said, I normally just aim for about 5 pips, 10 5 pips. But I'll show you it's not limited to that. It's just my preference because I want to be in and out of the market as soon as possible. So this is our zone here. And let's see if we could resume that enough. So just drag this out a little bit longer. So consolidation here, imbalance here, as you can see, straight up. We know price is going to come down to try to fill in this gap here. So as it comes down, it's reacting. I'm only interested in this zone, this point where it broke out. Yeah. So for me, that point is here at 14.97. So when price got to here, see if I could find that here quickly. Zoom in. So when price gets to 14.97, based on this little imbalance candle here, I'm looking for a reaction, and that's the reaction that I will scalp, right? So let's get back into this zone. Where is it? It's disappeared on us. There we go. All right, so first touch of my zone, 14.97, and there we have 17 pips. That's how accurate this strategy is. Can you see the entry from 14.97? This exact point here. Let's zoom in a little bit if you can see a little bit clearer. There you go. If you want to talk about sniper entries, 14.97.8, and we've got maybe a less than a 0.8 difference drawdown, not even 1 pip drawdown, and we get our 18 pips if you wanted 10 pips reaction straight away. So we're only interested in that. Take my 10 pips, take my 18 pips, or in my case 5 pips in some days, and that's it. I could do this all day really. I don't want to make this video too long, but I could do this all day. So any pair I like, let's just get rid of this. I'll show you quickly. Any pair I like. Here's one, consolidation here. Draw it out. Okay, so that's a reaction. It looks like it just missed our zone, but I'm gonna draw this all the way, drag this all the way out. You're gonna see actually it hasn't. It just came very close to it. And over here, here's the reaction we were waiting for. So I think we've got the reaction in the Asian session because it's low volume here. So even in low volume situations where you don't really want to trade, you're still getting 16 pip reaction. So really this, I mean, try it for yourself, back test it, and you'll see exactly what I'm doing. See how it works here. It works. What can I say? It works. It's a winning strategy that works. My win rate tells me that this works. My back testing tells me that this works, and I'm happy to stick to it. If you are disciplined and you follow this strategy, you're going to become a profitable trader, and that's it really. Okay, so I'll show you a few examples here. Hopefully now it's clear what I'm talking about. In terms of TP, in terms of SL, it's something for you to consider, or I may make another video about that because I don't want this video to be too long. In terms of risk management and so on, something for you to consider. But for now, this is me back testing the strategy that I use, showing you examples so you could do it yourself. So have a look, back test it yourselves, come back to me in the comment section and let me know how the back testing went for you, if it worked or not, if it's something that's sustainable or not. As you can see, there's no indicators here. This is a very simple way to apply supply and demand and simple way to read the charts. So Hope you appreciated that. If you did, you know what to do. Hit the like button. If you need more information or you want more content like this, hit the subscribe button because I'm going to try to put out more videos to help you newcomers, new traders like myself to become profitable. So that brings us to the end of the video. This is Patrick, and until next time, peace.